Ever thought about how the wise use their money to create more money? Welcome to Investing 101, Building Wealth with Smart Choices. In this video, we unravel the art of investing, breaking down complex concepts into simple, actionable strategies. Whether you're a beginner or looking to refine your investment skills, this journey is tailored for you. Prepare to embark on a path that demystifies investing and sets the foundation for lasting wealth. Let's dive in. Understanding investment basics. Investing is the act of allocating resources, usually money, with the expectation of generating an income or profit. It's fundamental in building wealth and securing a financially stable future. The first step in investing is understanding the various types of investments, like stocks, bonds, mutual funds, and real estate. Each type comes with its own risk and return profile. Educate yourself about these basics and how the market works. This knowledge forms the foundation upon which you can build a diversified and balanced investment portfolio. Remember, informed investing is about making choices that align with your financial goals, risk tolerance, and investment horizon. Setting investment goals. Setting clear, specific investment goals is crucial in guiding your investment decisions. Start by determining what you want to achieve through your investments. Are you saving for retirement, a down payment on a house, or your child's education? Your goals will dictate your investment strategy, including the types of assets you invest in and the level of risk you are willing to take. Make your goals SMART, specific, measurable, achievable, relevant, and time-bound. Regularly review and adjust these goals as your personal and financial situation changes. Clear goals keep you focused and motivated, helping you stay on track in your investment journey. Understanding risk and return. In investing, risk and return are directly related. Generally, the higher the potential return, the higher the risk. Understanding your risk tolerance, your ability and willingness to lose some or all of your original investment in exchange for greater potential returns, is crucial. Assess your financial situation, investment objectives, and how you emotionally handle risk. This will help you make informed decisions about where to place your money. Remember, no investment is without risk, but through proper understanding and management, you can align your portfolio with your comfort level and investment goals. The power of compounding. Compounding is one of the most powerful concepts in investing. It's the process where the earnings from an investment earn their own earnings over time. The key to harnessing the power of compounding is time. The longer you leave your investments to grow, the more significant the compounding effect. Start investing as early as possible, even with small amounts, and reinvest your earnings. This disciplined approach can turn modest savings into substantial wealth over the long term. Understanding and leveraging the power of compounding is a crucial step in successful investing and wealth building. Diversification, spreading risk. Diversification is a key principle in investing. It involves spreading your investments across various asset classes like stocks, bonds, and real estate, and within asset classes like different sectors or geographical regions to reduce risk. The idea is that if one investment performs poorly, others might perform well, balancing the overall risk in your portfolio. This strategy can help protect your investments from market volatility and unforeseen economic changes. Remember, diversification is not about eliminating risk, but about managing it more effectively. A well-diversified portfolio is a fundamental element of a smart investment strategy. The importance of a long-term perspective. Successful investing often requires a long-term perspective. While the market can be volatile in the short term, historically, it has tended to rise over the long term. Having a long-term outlook helps you ride out market fluctuations and reduces the risk of making impulsive decisions based on short-term market movements. Focus on your long-term goals and resist the temptation to react to short-term market noise. Patience and discipline are key virtues in the investment world. Remember, investing is not about getting rich quickly. It's about steadily growing your wealth over time. Researching investments thoroughly. Before making any investment, thorough research is essential. This includes understanding the investment's fundamentals, the industry it operates in, and its future growth prospects. Utilize resources like financial news, investment analysis reports, and company financial statements. Don't rely on hearsay or follow trends blindly. Making informed decisions requires a deep understanding of what you're investing in. If necessary, consult with financial advisors or investment professionals. Remember, the more informed you are, the better your chances of making successful investment decisions. Investing in what you understand. A golden rule in investing is to invest in what you understand. This means putting your money into businesses, industries, or sectors that you are familiar with or have knowledge about. Investing in areas outside of your understanding can lead to uninformed decisions and increased risk. Take the time to learn about different investment opportunities and stick to those that align with your knowledge and interests. This approach not only minimizes risk, but also makes the investment process more engaging and rewarding. Regular monitoring and rebalancing. Regular monitoring and rebalancing of your investment portfolio are crucial. Market conditions change, and so do your financial goals and risk tolerance. Periodically review your investments to ensure they align with your current objectives. Rebalancing involves adjusting the proportions of different assets in your portfolio. If one type of asset has grown more than others, you might sell some of it and buy more of other types to maintain your desired asset allocation. This practice helps maintain the risk level you're comfortable with and can improve the overall performance of your portfolio. Remember, a set-and-forget strategy is not ideal in investing. Staying engaged and making adjustments as needed is key. Avoiding emotional investing. Emotional investing can be detrimental to your financial goals. Decisions driven by fear or greed often lead to buying high and selling low, the opposite of what successful investing entails. Stay disciplined and avoid making impulsive decisions based on market hype or panic. Stick to your investment plan and strategy, and don't let emotions dictate your actions. Remember, the stock market is influenced by a range of factors, and temporary fluctuations are normal. Keeping a level head and a rational approach is crucial in navigating the investment landscape successfully. The role of professional advice. For many investors, seeking professional advice can be a wise decision. Financial advisors and investment professionals can provide valuable insights, especially if you're new to investing or dealing with complex financial situations. They can help you define your financial goals, develop a suitable investment strategy, and navigate the myriad of investment options available. While it's important to educate yourself and be involved in the decision-making process, a professional's expertise can be a significant asset in your investing journey. Remember, the cost of this advice should be weighed against the potential benefits it brings to your investment strategy. Staying updated with market trends. Staying informed about market trends and economic conditions is essential for investors. It helps in making educated decisions and spotting potential opportunities or risks. Follow financial news, subscribe to investment newsletters, and attend seminars or webinars. However, it's crucial to differentiate between short-term trends and long-term movements. Don't get swayed by temporary market sentiments. Use the information to inform your investment decisions within the context of your overall strategy and goals. Remember, staying updated is important, but it should complement, not dictate, your investment decisions. In this video, we've explored the fundamentals of smart investing, offering strategies to guide you on your journey to financial prosperity. Remember, investing is a powerful tool for wealth creation, but it requires knowledge, discipline, and patience. Thank you for joining us in demystifying the world of investing. If you found this video helpful, please like, share, and subscribe to Money Magnify for more insightful content. Together, let's continue to explore and master the art of investing. Your financial future is bright. Let's magnify its potential.